Good morning, everyone, and welcome to Building Binary Option Strategies Using Technical Analysis Part 1. We will be doing a Part 2 tomorrow at the same time. My name is Gail Mercer, and I am the founder of TradersHelpDesk.com. Now, before we get started this morning, I would like everyone to read over the Nadex risk disclaimer. It is for your protection as well as mine. And basically, anytime you're trading, including trading binary options and spreads, there's always risk involved. And you should never trade with money that you cannot afford to lose. Now, for those of you that do not know me, I have well over 15 years of trading experience. I started out with a company that programmed indicators and simply fell in love with the price bar. I specialize in price action, volume analysis, and divergence because I believe they are leading indicators. Okay. I'm also a frequent contributor for Stocks and Commodities, Traders World, and Top Shelf Magazine. I've also been a prior speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options and Spread Using Candlestick Patterns, Trading Nadex Binary Options Using Currencies, Trading Nadex Binary Options Keeping It Simple Strategies, and The New Trader's Guide to Trading Nadex Binary Options and Spreads. All of these books can be purchased either on my website or on Amazon.com. Now, today's discussion is really going to be looking at simple technical analysis indicators that you can choose from in the Nadex platform. We're also going to be designing a sample trading plan based on technical analysis, as well as how to test the plan. Now, before we get started, I do want to give out my contact information, and that is TradersHelpDesk.com is my website. And you can also email me at gm@TradersHelpDesk.com, and I will be more than happy to answer any of your questions. Now, what I'd like to do is start looking at some technical analysis in Nadex demo account. And give me just a moment so I can bring it up. Okay, can everyone see the Nadex platform? Okay, we are doing good. So let's just go and look at some forex binary options. And I'm just going to choose the USD JPY. And I'm going to choose a 2-hour expiration, which will be the 1 p.m. Now notice here that you do have the chart icon window here. So we're just going to click on the chart icon window. And you can see that we can see all of the strikes over here. I'll expand that out just a little bit. So we see the strike prices over here, and you can see I don't have any indicators on my chart. So the first thing I'm going to do is change this over to a 15-minute chart by clicking on 15 minutes. And then I'm going to go and select some indicators. Okay. Now you can see we have all the indicators are listed over on the left-hand side. And I'm going to use, let's start out by using the pivot points. Okay. Does everybody in the room know what pivot points are? Okay, pivot points, they're also called floor trader pivots. And this one over here on the left-hand side, it's giving you the formula for the pivots, okay? It's the high plus the low plus the close divided by 3. Okay, that's what that's telling you. Now, you're right up at the resistance 1 line. Okay, and you have a pivot line right here, and then you have an S1 down here. Now, if I shrink this up just a little bit, you can see there's actually an R2 and an S2, as well as an S3 and an R3. Now, these lines are going to work just like support and resistance. In other words, the R1 is going to try to push price down. In other words, it's going to act as resistance. Okay? Does everybody understand that? So if you have watched my presentation on candlesticks, then you would know that this is a candlestick formation that's currently forming. Okay? So let's say that we believe that price is going to go down from this area. Well, we have a couple of different choices here. We could do, 113.04, again, with a bias to the downside. We could do 113, or we could even come down here to 112.96. Okay? Yes, this is being recorded and sent out. Okay, now that's really just based on this candlestick, the fact that we have R1 above us that should act as resistance. Okay, you can also see that we made a high here and the buyers rejected it because a bearish bar formed. They also went back and tested it here, and again a bearish bar formed. And then we have this one which currently is also forming a bearish bar. Does everyone understand these concepts so far? In other words, what we're seeing right now is rejection of this area. Okay? Now, how would we develop a trading plan that we could trade and we could go back and back test to say, okay, this is a rejection and this is the direction that we will go in? Because that's really what trading is all about, being able to formulate a strategy that you can use time after time after time and measure your performance. Okay, well, I'm going to bring up a Word document and we're going to try to do this. So what is the first thing that we do? Okay, well, let's identify the market. The market that we can use this on is any forex market. Okay, now what time frame are we using? In this case, we're going to use a 15-minute chart with a 2-hour binary option. Okay, what do we want to see? Okay, well, we're going to add the indicator, which is the pivot line. Okay, and we want to see a rejection for short. Okay, and we want to see support for longs. Okay, well, what does that mean? Okay, that means that maybe it is at S2, S1, or the pivot line, if I can spell today. Okay, and we form a bullish bar. Okay, for those of you that don't know, bullish bar is a green bar. What's a rejection for a short? Okay, that means it would be at R1, R2, R1, or the pivot line, and we form a bearish bar. That's a red bar if you don't know which one is which. Okay, does everybody understand this so far? Okay, now that's our indicator. All right, now what do we do if we see these conditions? Okay, well, this is where you would have your trade entry criteria. Okay, first in the entry is what? Price must be close to either the R2, R1, or a pivot line, and a bearish bar is complete. Okay, all right. What do we do once that criteria is met? Okay, here are our entry options. And this is dependent really on what your risk level is. Okay, let's say that you're willing to risk, $50 per trade. Okay, in that case, what we could do is say we're going to enter an at the money binary option. Okay, risk must be $50 or less. Okay, or if you're saying, well, I don't really want to risk $50. Okay, let's say you're only willing to risk, $40 or less. All right, you could do an out of the money binary option, and the risk must be $40 or less. Okay, but you could also do an in the money. Okay, what does an in the money mean? Well, in the money would be any of these that are above price right now. Why above price? Okay, because we're trying to go short. Now, if we're trying to go short, that means the in the money would be 113.08. Does everybody see that? So this is totally dependent on what your risk parameter is. So we could do an in the money binary option. Risk must be less than 80 bucks. Okay, that's an in the money. Typically your risk is going to be that way. Okay, your risk is higher on the in the money because at that moment in time the probabilities are greater that it will expire in the money. Okay, so you have 3 different entry mechanisms. Now, we want to go back here and we want to enter a 2-hour binary option with a minimum time remaining of 1.5 hours. Okay, does everybody understand that criteria? That means if you're using a 15-minute chart, which we're using, then we would have a minimum of 6 15-minute bars. Does everybody understand that? Now, this is a very simplistic trading plan. Okay, it took us 13 minutes to design the chart and the trading plan. But it's something that we can go back and look at and actually test and say, okay, does this theory work for us? Okay, so in this case, let's do each one of these. Okay, we don't have at least one strike in our favor here. So I'm actually going to go up to 113.08. That would be the out of the money. Okay, so we're going to click on the bid because we're going short, and it's $78 of risk. So we're going to place that order. And then for the at the money, we would come down here to 113. And this one has less than 50, which is our criteria. And we're going to do this one down here, which is 34.50. Again, all 3 of these have met our criteria. Okay. Okay, how many 15-minute bars is in an 8-hour period? Well, there's 4 15-minute bars per hour. So if you're doing a 2-hour binary, that gives you 8 15-minute bars. Okay, but we want a minimum of 6. Why does that matter? Okay, Well, you're not always going to get your trade entry at the top of the hour, meaning a full 2 hours. So you have to say, okay, if there's only an hour remaining on this binary, then I'm not going to take it. That does occur. For example, at 9:45, you could only take either the 10 or the 11 o'clock expiration, meaning there's only a minimum of 5 bars in your trade. Because you have a full hour plus 15 minutes, that means there's 5 bars. Does that answer your question, Tamara? Okay. Now, those are current trades that we are in right now. We can also go back and we can look and see how well this actually worked for us. Okay. So I'm going to shrink the screen up a little bit. Okay. And we can see here, okay, we are at the S1 line. You see it right here, okay? And we have a bullish bar forms, okay? So this would potentially be an entry point, and that occurred at 2:45. Would you have 6 minutes in your trade? 6 bars in your trade? No, because it's one of them that occurred at 2:45. You would have to wait until what? You would have to wait until the 3 o'clock bar forms. The 3 o'clock bar is a bearish bar. Can you enter that trade? Using your trading plan, can you enter that trade? No. The trading plan specifically says that you need a bullish bar for a long entry. Okay, so this one does not qualify. Okay, you have it again at 3:45. Again, you cannot enter it. Why? Because that's one that does not have that 6 bar minimum. You then form a bearish bar again. Okay, that is followed by a bullish bar. This is the point that you can enter that meets your criteria. Does everybody understand that? Okay. Here, it was at 2:45. Okay. But if you entered that, you only have 5 bars. Okay. Until expiration. You cannot enter that. By the time you could enter at 3 o'clock, you have a bearish bar. You're trying to go long because you're at S1. Okay? So you still have to wait. You can only enter on a bullish bar. Okay? So this one you cannot enter. Okay? This one, again, it comes out at the 45-hour mark. You cannot enter. Cannot enter on a bearish bar. You could enter on this bar. This is your 415 bar. Okay? That gives you a binary option with a 6 a.m. expiration, and how many bars would be in that trade? It would be 7 bars in this trade. Okay? So you could do this one. Okay? Now, let's presume that you had a strike at 84. Okay? This would be your strike at the money. Now, what is the strike width on the USD JPY? It's 4 pips. So your next strike would be at 88, which would probably be about here. And then your in the money would probably be at 80. Okay, so this would be your in the money, this would be your at the money, and this would be your out of the money. At 6 a.m., that is this bar right here, okay, would price have expired in the money? Yes, because this price bar right here is greater than the out of the money, the at the money, and the in the money. Now, if you entered on the red bar, you were incorrect. If you entered on this red bar, you would be incorrect. You did not trade according to your trading plan. Does everybody understand that? Any questions on that? Okay, and that's just using pivot points. Okay, what if you don't like pivot points? What if you don't understand pivot points? Well, don't use pivot points. Choose something else. Okay. Here's another one that a lot of people like to use. We're going to take this one off and we're going to put moving averages on. So if we click here, we go to moving average, and you can see it just put 3 lines on the chart. Okay. Now, if you come down here, right in the lower left-hand corner, you can see you have a 20-period moving average, a 50-period moving average, and a 100-period moving average. Let's say that you didn't want to use those. You want to change them. Okay, let's say that you want a 10-period, 20-period, and a 50-period. Okay, you just type in the values right here, and that changes it. Okay, and I'm going to tell you right now, there is no magical number in any of trading. Okay, I know, some people think Fibonacci's are magical. That's a preference. Okay, some people will use a 20-period moving average. Some people will use a 10. Some people will use a 9. There is nothing magical. Okay, what is magical is that you can trade it with a plan day in and day out. Okay, so let's come back to the trading plan and let's say, okay, this time we're not going to use a pivot line. So we're going to take that out, and our trade criteria is going to change as well. So this time we're using a moving average. It's going to be 3 lines, and it's a 10, 20, and 50 period moving average. Okay, what would our entry criteria be? Okay, we could do a long, and what would we want to see for a long entry? Let's see. What would you think that you would want to see? First thing I would want to see personally is the fast moving average is above the medium term moving average. And I would also want the medium moving average above the slow moving average. Okay. What does that mean in plain English? Okay. Do you see the colors over here? Well, the green is the fast, the black is the medium, and the red is the slow. So in plain English or color coded, it would mean green above the black. And this one, it would be black above the red. Okay. Why do I put that in there? Okay, because I'm a new trader. And I don't want to have to stop and think, okay, which one is this? I already know this is what it is. Okay. It's in my trading plan, so I don't have to worry about it. Now, what would give us an entry? Okay. Price touches, and I'm going to put touches instead of retrace because I'm a new trader. So price touches the fast moving average and a bullish bar develops. What does bullish bar mean? A green bar. Okay, now we need to do one for a short. Okay, so let's go back and let's do a short criteria. And for a short, okay, we want the fast moving average below the medium. Moving average means green below the black. Okay, on the medium moving average, we want it below the slow, which means the black is below the red. And price touches the fast moving average in a bearish bar develops. And that means it's a red price bar. Okay. So now you have a very, very easy to follow trade setup. Okay. I'm sorry, I don't know what that was. Is anybody else hearing noise, or is it just me? Okay, give me just a moment. Yeah, it sounded like music playing. I don't know what it was. Scott, how do you trade at the money, in the money, and out of the money when you enter? Do you buy or sell, and which ones do you buy and sell? Again, it depends on your trading plan, Scott. Okay. For example, when we were doing the pivot line, it specifically stated that we needed to sell. Why? Because we were at the R1. Now, which ones do you buy or sell? What's your risk tolerance? That's really what it depends on. Okay. If, you know, and this really kind of comes into your trading personality and your risk tolerance and how well you take a loss. Okay. It comes into psychology. I don't mind having a lot of negative trades as long as I can keep my risk to reward ratio up, because I already know if I can keep my risk to reward ratio up, it's not an issue. Okay, if I can achieve a risk to reward ratio of 1 to 1.5, hey, I can take more losses. It doesn't bother me. Okay, does it affect my psychology? Okay, because that's another thing you have to take into consideration. Is it going to depress you because 40% of your trades were losing? Well, it doesn't depress me because I know I'm still profitable. Okay, let's say that, you know, you're one of these that, hey, you can't take 40% losses. Okay, because it harms your psychology. It harms you mentally. Okay, you might want to do an in the money. Then it becomes, are you willing to risk $80 to make $20? And if you are, do you have an account that can withstand that type of risk? You know, it's funny, I just did an article on men versus women, and men typically will risk more. Women tend to think it out a little bit more, and we typically will risk less. Men also trade more. they're more reactive than what women are. Some of that has to do probably with the testosterone, okay? I know most women would have issue with this trade up here that we took, even though it might make money. Psychologically, we will have an issue with that because we were risking $80 on that trade, whereas this one down here is one that most women would take because they're saying, okay, if I risk $35, that gives me the potential to make $65, which is almost double what my risk was, which is a good deal. And trading is about bringing all of this together. And the first place that you start, again, is with your trading plan. Okay? And in this case, you know, you can see, okay, the green is above, the black is above, okay? And then this is the one right here that you would have entered on, this big green bar right here, okay? Now, even though it's losing at the moment, doesn't mean that it would remain losing. Why? Because you would have 6 bars from entry. This is bar 1, bar 2. We still have 4 more bars. Okay? Where else could you have entered using this trading plan? Okay? Let's go back and let's take a look. And let's see, it has to come back and it has to touch the fast moving average. The red and the black have to be above. So in this case, you could have entered on this one. You could have entered on this one. I would have entered on that one because it closed above. And you could have entered on that one. Now, right in here, there's no trades, okay? The next set of trades do not come until right around here. You potentially could have entered here, didn't quite touch it here. You could have entered here. This one would have been a loss right here. And this one you would be waiting on. Do you see that? So basically, just going back and looking at it, you had 1, 2, 3, 4, 5, 6 potential trades. 1 lost, so you're probably got 20% losing rate just looking at that. Do you see that? Now, would you want to go back and test more than one day? Absolutely. You know, typically I go back and I will look at least about 200 trades. And then what do you have to do? You have to test it on the live edge of the market. And that's where it gets real complicated, okay? Why does it get complicated? Well, the number one reason is because you have to grade yourself. And, you know, most of the time, it's very hard for you to say, I made a mistake. I did this wrong. You know, we don't really like saying that very much. So if I go ahead and shrink this back down some, we could grade ourselves on the pivot lines. We did it correctly. But let's say we were using the moving averages, okay? The one thing that I do, there is a program, it's called Jing, and it's free, and I actually capture all of my trades on the entry. So in this case, I'm going to capture this screen, okay? And then I'll show you what I do with it. So this is my screen capture. You can see it. And I'll go over here and I'll annotate this. Can't talk today. And I just put in my trade criteria. Okay. Price was at R1, I think it was. And bearish bar formed. I entered OTM with $35 of risk. Okay. Why does that help? Because a lot of times what you see when you're trying to enter a trade and what you see later will be totally different. And a lot of times you'll say, oh man, I should have seen that. You know, maybe you entered before the bar completed. Okay. Which is, you know, really you shouldn't do, because that bar can change a whole lot. Okay. Maybe it wasn't at the R1. Maybe it wasn't at a pivot line. Okay. Maybe the bearish bar didn't form. Maybe the bullish bar didn't form. Okay. So this kind of holds you accountable for what you are doing. Do y'all understand that? And it also gives you areas where you can tweak your strategy. Okay. Because by going through the different charts, you'll start to say, hey, I'm recognizing this pattern. And I've seen it on all of my trades. XYZ is happening. Maybe I shouldn't enter when XYZ happens. Okay. It could be something simple like, okay, I'm in a trade, but then a reversal bar, you know, forms on the next bar. This is stuff that you capture through these screenshots. Does everybody understand that? And this is the way that you start tweaking it. Now, this one, I mean, it was very simple, you know, nothing complex whatsoever. It doesn't matter, you know, we could change this into, let's say, a 60-minute chart. Okay. And this is one of the questions I get a lot is, okay, you know, I use candlestick patterns a lot. Will it work on a 1 hour chart? Sure. It'll work on a 1 hour chart just as well as it works on a 15-minute chart. Okay. That doesn't matter. What will change is what? I wouldn't use a 2-hour binary trading a 60-minute chart. What would you need to do? Well, if you're trading a 60-minute time frame, go out to a daily. Again, if we use the same thing, same logic, we need 6 bars to close in our direction. Okay, we're using a 60-minute chart to identify the entry. So that's 1, 2, 3, 4, 5, 6 hours we need. So what do you need to do then? Well, I need a daily that has at least 6 hours until expiration. Does everybody understand that? Okay. Do you have to use moving averages? Do you have to use pivot points? No. Choose another one. Choose a MACD, you know. MACD, again, it's really, it's built on moving averages. You could come in here and trade the MACD. Okay, the MACD has to be going down. A bearish bar has to form. Okay. If you're a longer term trader, I actually would consider it a medium term where you're trading the daily chart. Okay, the MACD has to be red in a bearish bar forms. Okay, this is a starting point for you. Okay, don't put on a lot of indicators. Okay, choose one. choose the one that makes the most sense for you at this particular time, okay? And then go back and say, okay, if I was using the MACD, okay, the MACD went red here, so I could have traded it here. I could have traded it here. I could have traded it here when it went red, okay? What if I want to go long? Well, the MACD needs to be green. Here's your green. Here's your green. Here's your green, okay? What do you need in addition to that? A bullish bar, okay? And then just go back and say, okay, out of all of these trades, I had, according to this, X amount were profitable, X amount were losers. Okay, can I do that on the live edge of the market? And that's where you start trading in a demo mode, okay, so that you can track your trades. Make sure that you're capturing the image, okay, on entry and on exit. That's where you'll start to see, and that's where you'll be able to say, hey, I can fine tune this here. Does everybody understand that? Any questions on that? You know, if you have something like TradingView for charting, I use multi-charts. You can go into that platform and go back and back test it is what it's called. What do you mean, what configuration, Ari? You know, if you're a new trader, you know, TradingView has great charts. I just use the default. Start with defaults, okay? And then if you want to change them, you can start modifying it. But again, start with the defaults. Now, if you haven't tested it with the defaults, then why are you changing it? And that's really the way I feel, because you don't know what it does on the default, so how do you know to change it? And this is where most of your time will be spent, is going back and actually testing it to see, okay, yes, this would work. No, that doesn't work. You can even, how many of you know that you can actually look up all the data for the binaries if you want to? Does anyone in here know about that? Take some time. Okay. If you go to nadex.com, okay, and this is important when you're back testing data, and this is live data, live accounts. If you come down here to market data, okay, and I actually do love these. You can go to the results, okay, and let's say we want to check on September 12th. Okay, we're going to get the results. Okay, now this actually will list the binary options for 9/12/18. You actually can see the strike price, the expiration, and who won that particular binary, not one, but which side was profitable. Okay, and it also gives you the expiration value. Okay, this is what you use when you're back testing these. Okay, so let's go down. And anyone that has seen my presentations before, I've told you, know your strike width. Okay, so let's go to the Aussie dollar Let's go to 3 a.m. Okay. So you have the Aussie dollar 70.66. Okay. The actual value was 70.97. The buyer was the profitable one on that binary option. Do you see that? Okay. So if this is at 70.66, what would be the next strike? It's a 4-pip strike width. It would be 70.70. And the one on the other side of it would be 70.62. So you have, I mean, Nadex provides us with the data to go back and back test anything. Does it take time? Yes. But most businesses need planning, okay? And this is your planning phase. So you should spend time doing this. Any questions on that? It's really simple to pull up. I believe it's available 15 minutes after expiration. I've had to use it sometimes. And it's really important because it gives you that half digit, okay? So you can actually go back and back test anything you want to see. Now tomorrow, we're going to start adding indicators, okay? So that, okay, right now we're only doing one indicator, but hey, can we improve the results a little bit, okay? And that's where we're going to use different techniques. We're going to be adding, but it all begins with your first indicator, okay? Now, any questions on designing a trading plan for using one indicator? Go back and change this to a 15-minute. Any questions on it? Well, thank you all for joining me today. I hope you all come to the presentation tomorrow, because tomorrow we're going to be fine-tuning the trading plans. Okay? All right. Everybody have a wonderful day, and I will see you tomorrow.